Hi, everyone. Today I want to talk about the news. I got 3 articles that I want to talk about. First up, high yield savings accounts finally cut their rates even further. The Fed decided they're going to start buying bond ETFs. And then Jerome Powell put out some comments and the market dropped. Finally, I'll summarize it all up and then finish with a little bit of jelly, which is something I enjoyed outside of the markets. If you're interested in buying the Lady Mora, which is the first ever super yacht to be built, it is 105 meters long and price isn't public, but they think it might sell for around $250 million. So if you're interested, go ahead and like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. First up, high yield savings accounts have finally been hit by the Fed's rate cuts. We knew this was coming. On March 15th, it says here, the Federal Reserve cut interest rates to 0 in an emergency announcement as the coronavirus crisis accelerated in the United States. The drop from 1.25 to 0 to 1/4 was the largest rate cut in history. So they cut rates 1%, and that was already 1% down from the rates in December of 2018. The Fed rates had actually been increasing fairly consistently as the economy was strong, and many accounts were offering 2.2% APY. So this article is pointing out that rates have finally caught up here in mid-May. Many more aggressive players, it says here, have kept their rates up. Goldman Sachs, CIT Bank, which is the bank that I use, Citibank, HSBC Bank, Synchrony were paying 2.25%, higher than their competitors at Ally Bank, Barclays, and American Express. So this is pointing out, finally, Marcus, which is the Goldman Sachs account, dropped from 1.55 down to 1.30. It also says here that Ally Bank is staying at 1.5%. And then finally, they did drop their rates down to 1.3%. Citibank, which is the bank that I use, is now dropping their rate down to 1.3% as well. HSBC and Citibank are trying to keep their rates up at 1.6 and 1.55. We'll see if that drops down in the near future. But the point is, all of these accounts are dropping down. As an alternative to this, I am still maintaining my position in worthy bonds. You can see here they are still paying a 5% annual rate. I did a deep dive on this platform in my high yield savings video, which I will link in the description. I will also put a link for a free bond with my affiliate link in the description if you're interested in this platform. Up next, bond ETFs jump as the Fed wades into the market. So the Fed decided that they are going to start buying investment grade bond ETFs. It says here, bond exchange traded funds roar higher on Tuesday, the first day the Federal Reserve stepped into the market to help keep credit flowing in the aftermath of the cough-induced March market shock. The fund that they seem to be buying is LQD. I did cover this one a little bit in my higher yield savings account. It is one of the funds that I hold in that account. Another fund that we think they plan on buying would be the Vanguard Intermediate Corporate Bond, or VCIT. LQD and VCIT are some of the most heavily traded bond funds, and it makes sense to expect that those would be the ETFs that they will be buying the most. And both of those funds have risen since the Fed announced that they would be buying corporate bonds. Also, they did announce that they would be buying the Fallen Angels Fund or Junk Bond Fund in the past, or ANGL. So basically, at this point, they are buying all types of different bonds to help support these companies through this cough situation. To quickly show the funds that I was mentioning, this is my higher yield savings account. If we scroll down here, you can see I own long-term corporate bonds. This is VCLT. And then if I go in here to midterm bonds, it takes me to this, which is midterm bonds. You can see it hasn't gone down at all since this market drop. And then scroll down here, VCIT is 35% of this holding. Going back to the higher yield savings, and then going into this bond fund, you can see here I have ANGL as 15% of this bond fund. AGG is another pretty large corporate bond fund. And then I have LQD inside here also. So I have AGG, LQD, and ANGL. These are all the different bond funds that the Fed is likely buying. These are all investment grade bonds, and then ANGL is the Fallen Angels fund that was mentioned. Caution, extreme sarcasm ahead. All right, on to the Jerome Powell comments. So Dow closes 517 points lower Wednesday as Fed's Powell says cough situation crisis without modern precedent. This is a truly enlightening statement as we've been experiencing very consistent pandemic-like situations for years. Jerome enlightening us that this one is very different from all of the previous extremely large pandemic situations that have shut down the global economy in the past. But despite everyone's experience with this, he felt it was necessary to mention that this pandemic is without precedent. He then went on to say that the U.S. economic outlook was both highly uncertain and subject to significant downside risk. Just continuing to enlighten us about the economy and the situation out there, in case anybody was confused on the topic. There is risk in the economy, and when the global economy is shut down, it turns out that there is some downside risk in the stock market and the financial economy. He then went on to say that the scope and speed of this downturn are without modern precedent, significantly worse than any recession since World War II. Jerome's face here is a good representation of his comments. I'm not quite sure why he feels the need to say things like this. I feel like everybody understands the impact on the economy. If you don't understand the impact on the economy, you're probably not listening to Jerome Powell talk about the economy. So really, these statements are just repetitive. At this point, just let the economy do what it's going to do. Continue to manage the Fed and do what you want to do with that. But comments on the economy as a whole are probably not helping anybody. I don't know what's going on with this guy here in the back. He seems pretty pumped about whatever Jerome is not so happy about here. But I thought this was a funny picture and really represented his general outlook on the economy right now. All right, to summarize, the Fed cut rates a little while ago, and high yield savings accounts are now reacting to that cut. That means banks are going to make less money lending your savings accounts out to other banks and passing that interest on to you. So those accounts are yielding less. As an alternative to that, Worthy Bonds is still offering 5%, and I use that as part of my savings plan. The Fed announced that they are now buying even more corporate bonds than they were before. They're continuing to buy junk bonds, so LQD and VCIT and ANGL are all bond funds that the Fed is currently buying. I do break those down in my higher yield savings account video if you want more information on those. And finally, Jerome Powell restated the obvious that there is a lot of uncertainty in the markets right now. This cough situation is something that the markets have never seen before. And because of that, the market dropped. So his comments of the very obvious state of the economy dropped the market a little bit further. And I feel like he doesn't need to make comments about the economy as a whole. He just needs to focus on his job. So with that, let's get to the jelly. So today's jelly is a little bit of a throwback, but it's new to me. Elon Musk was discussing with Jack Ma. Jack Ma is the co-founder and former executive chair of Alibaba. Alibaba does everything from manufacturing, supply, and export, as well as tech. And Jack Ma is worth around $41 billion right now. And him discussing with Elon Musk is a little bit hard to watch. So here's a clip of that.
Think about that. Actually, I'm not interested in Mars. I just came back from there, so I'm more interested on the Earth, the things, what's going on happening here. So why you're so curious about the Mars? Just the one step you go to Mars, but you will never be able to come back.
Yeah,
so that's my view.
That's not how it works, though.
And also,
no, don't do it.
I hate to go to Himalayas too. I mean, when you climb on the, I think someday I will go there when the elevator is ready. I will go there have a look. But so that's my view about jobs. Don't worry about it. You will have jobs.
Yeah. I mean, I think, yeah, you think of like technology and technology awareness. There's like, it's like, if there was like a topological map of technology awareness, it's mostly flat with a few short buildings and then some very tall spires. Very tall spires. And unless you're on that very tall spire, it's not obvious what the topology is.
Yeah. I never worry about the things that I cannot solve. I let other people to solve it. If nobody can solve it, just let it be. That's my life. Oh, let's talk about education. I'm quite interested about education. Computer only have chips. Men have the heart. It's the heart where the wisdom comes from. So I think
The fact that Elon really cannot control his facial expressions and can't really help himself from responding to Jack Ma's statements, and basically how lost Jack Ma seems in this conversation is really just, it's hilarious. And the fact that he is worth as much as he is quite astounding, actually. So if you made it this far, you must like content like this. So go ahead and like and subscribe so you can keep up with my future videos, and have a great day.